So Split Corp is an investment fund. These are investment funds that have been around for 20 years, and certain strategies have a proven track record of exceeding their benchmarks in many different market environments. These investment funds invest in portfolios of dividend-paying companies and offer two distinct share classes to investors: Class A shares and preferred shares. These share classes trade independently on the TSX. When an investor buys a stock, they're often looking for dividends as well as to participate in the gains of that company. Split share funds effectively reallocate or split these two benefits into the two separate share classes. The preferred shares receive a regular, cumulative fixed dividend, whereas the Class A shares participate in the gains of the company through magnified upside. Split preferred shares were designed for Canadian investors as an alternative to traditional corporate preferred shares. These securities pay a fixed, regular dividend backed by a portfolio of dividend-paying stocks. Split preferred shares are conservative relative to a traditional equity investment because they offer a steady income stream through regular dividends. These dividends usually come in the form of Canadian eligible dividends, which means they're taxed at a lower rate versus traditional income sources. Split preferred shares have fixed maturity dates and also offer monthly and annual retraction features for the investor. They also have a priority claim on the fund's investment portfolio over the Class A shares. Because of these features, the market prices of split preferred shares have tended to be quite stable over the last 20 years. Traditional corporate rate reset preferred shares are often issued with features that are favorable to the corporate issuer rather than the investor. These shares are perpetual securities that offer no retraction features to the investor and are typically callable by the issuer as well. They're also issued with fixed rate reset spreads, which means when it comes time to be called, only the highest quality securities tend to be called by the issuer, whereas what remains in the market are the lesser quality securities. Split preferred shares, on the other hand, are often issued with features that are favorable to the investor. They have fixed maturity dates and are retractable by the investor at maturity. When split preferreds get extended, they're extended on terms that are set in the context of the market at that time, rather than with a fixed rate reset spread. Because of these features, split preferred shares have been more stable with better overall performance than corporate preferred shares. Prior to 2022, we typically saw split preferred shares with coupon rates in the 5 to 6% range. Starting in 2023, a number of split preferred shares reached their end of term and were subsequently reset to rates in the 7 to 9% range. These securities also typically experience a pull to par as maturity approaches because retraction features allow investors to collect their par value at maturity. Brompton Split Corp Preferred Share ETF is Canada's first split preferred ETF. It's an actively managed portfolio of Split Corp preferred shares. It pays a monthly distribution to investors, has a low risk rating, and we think it's a great way for investors to get exposure to the split preferred market in Canada. You can find Brompton Split Corp Preferred Share ETF as SPLT on the TSX.